Now, in its Nigeria Public Finance Review report, the World Bank says that Nigeria's fiscal infrastructure gap would likely reach 3 trillion naira in the next 30 years. And it would take Nigeria 300 years to build world-class infrastructures, and that's still according to the World Bank. We'll be talking to Amarachi Okafor, Health Wealth Management at Norrenberger, to break this down for us. Amarachi, it's good to have you on the program, but I just want to start off with, what is your reaction to this World Bank report?
Thank you very much, Ibom. Good evening, viewers. My reaction will obviously be in the affirmative because apart from that report, several other reports have shown that Nigeria's core infrastructure has been estimated to be around less than 42% of the GDP, right? Which is significantly lower than the global average of 70%. So that, again, is a pointer to the fact that there are gaps in our infrastructural development. More so, in 2022, World Bank ranked Nigeria 132 out of 135 in terms of infrastructural development. That, again, is a pointer to the fact that we are lagging behind so much when it comes to infrastructural development. More so, when you take a look at all the other mint economies, I mean Mexico, I mean Indonesia and Turkey, which are economies that have been banded together and called a mint economy. Nigeria makes the N in it, and you can see that when it comes to all the core infrastructures like ICT, transportation, like water and sewage, like even the health sector, and when you look at other aspects of infrastructure in Nigeria, you will notice that we are far behind when it comes to comparison between us and other mint economies. So really, and to be honest, that report is kind of correct, honestly. And if there's anything that the infrastructural sector or infrastructural development is seeking in Nigeria is the participation of the private sector, which has not been as much as it's needed. And then there's a huge gap between Nigeria and other countries when it comes to infrastructural development.
Coming to
really, that report is not far-fetched.
Coming to that, we'll come to that in a bit. Now, we're looking at Nigeria's latest public debt. You talked about the public sector, but we're looking at the huge pile, the ballooning debt, the bloated debt we have in the country, currently at about 46.25 trillion naira. What is the risk of this debt, and how much impact will it affect funding, raised from the capital market?
Okay, so what this expanding debt means is that Nigeria is focusing mostly on subsidizing fuel. And of course, this is not trickling down to the masses because these subsidies provide an incentive for smugglers who take this cheap commodity to other countries where they make more. And then looking at it from another angle, the poorest of the masses only get to purchase like 3% of this subsidized fuel. So you discover that the area that the government has chosen to spend more money and that they've been borrowing doesn't trickle down to the masses. And of course, the masses are more than the bourgeois. So when it comes to this excess debt and servicing of this debt, you discover that the funds are not being channeled properly, and this has a huge impact on government expenditure. Now, there is also the issue of the fact that government is not able to raise revenue that will match our loan servicing expenditure. So this also makes it quite impossible for the private sector to be able to have full confidence and hope that the Nigerian government will do the right thing when it comes to borrowing for infrastructure. So a lot of private sector players shy away from this segment of the economy.
But you talked about the government not channeling the funds raised from the capital market to the needed infrastructure lacking in the country. But we've heard about the Sukuk bonds that have been raised and used to fund, build and rehabilitate roads across Nigeria. I want to know, has that not had any impact generally, in your opinion?
Okay, so it has had impact, but not as much as it is supposed to be. So if the impact was as expected, the World Bank wouldn't tell us that we are lagging behind to the tune of over $3 trillion, and that it will take us up to 300 years to meet up with world expectation or to meet up with the rest of the globe, right? So first of all, this Sukuk bonds has been floated, and a lot of those things suffer because of lack of private-public partnership knowledge, or maybe the expertise that is required for the stakeholders to be able to manage all the variables that are involved in this partnership. So we see that there is low maintenance culture, there is lack of adequate policies in terms of enactment and reinforcement. So the trust is not there when it comes to the private sectors trusting that investing in infrastructural development costs is going to trickle down to the common man and then increase and improve GDP.
So how do we bring in private sector?
If you check out the infrastructures we have, there's really low maintenance culture, and then a lot is not being put in place. Then when it comes to decision making, there's a lot of bureaucracy, there's a lot of gap, there's a lot of corruption going on, and no serious-minded private investor will want to take opportunities in a section that does not have a clear policy on such partnerships.
So how do you bring in private sector engagement, Armarachi? How do you think private sector will be attracted to coming into this, to play into this sector?
Okay, so for private sector to be attracted into playing and funding this sector, I would recommend clear regulations. There should be a clear regulation and clear objective so that there is not much gap between the expectation of the private sector investors and the expectations of other stakeholders, maybe in policy making or in government, right? So I would also recommend that they should reduce political risk. Such political risk that comes with change of government. You notice that a government changes and then the incoming government doesn't continue with the work of the other government, or they change policy that totally destabilizes what has been going on. So there is this distrust. I mean, the private sector cannot afford to play in a field where there is no clear-cut policy, where things are not going to, there is no continuation of projects, and it can lead to some losses for them. And of course, private sector people they are not out to make losses, they are out to maximize potentials for their fund and return to their investors. So obviously, I will recommend clear-cut policies. Then I will recommend that government can find a way to give tax incentives to private sector. It can be a way to like lure them into making investments in this sector, because really, as it is right now, there's really not a lot going on. There's really not a lot of attraction for the private sector players to be able to engage in funding of infrastructural projects in Nigeria.
Talking of investments and equity investments at that, we see that Norrenberger has acquired 60% of the infrastructure bank. How do you think that's going to play out now? What should we expect now that Norrenberger has acquired 60% controlling stake in the infrastructure bank, that's TIB, which is owned by the government?
Okay, so that acquisition for Norrenberger marks a strategic milestone in its infrastructural mission, because Norrenberger is a company that has the interest of infrastructural development at heart, especially within the Nigerian economy. And of course, that acquisition was done in line with the TIB Establishment Act, which allows for the act that allows for like bringing in private equity, private investors or private funds or private capital into TIB's equity. So, of course, that is a step in the right direction, especially for TIB and for infrastructural development in Nigeria. So, it's a step in the right direction, and Norrenberger is positioned to stir up the affairs of infrastructural development as a partner in TIB or as a co-owner of TIB. So we should expect some groundbreaking results going forward, because Norrenberger intends to bring her expertise into that sector to ensure that things are done better than they used to be done, and we should expect a lot because strategies are in place. And for Norrenberger to have won that, that takeover,
we'll look forward to that.
A lot was done, and
we'll look forward to that, Ms. Ramarachi. We definitely are running out of time now. Head Wealth Management, Norrenberger, for sharing your thoughts with us. It was great having your perspective on the program this evening.